topic in. What's the topic? Today we are going to explore, right? If the stock market is about to crash. Now, this is a somber topic. It is something that is that can be quite saddening, right? Your heart can be a bit broken, but this is reality. And I see something that is coming. I see that it is coming. So my team and I, right, would like to prepare you, right, for the things that are coming. Okay. So even though this is something that's not so pleasant, we still want to share it with you. Can? So if that is okay, type okay in the comments. Not comments, chat. Comments is for Telegram. Chat is for Zoom. Okay, good. Okay, so even though this is a very serious topic, it's a somber topic, but let's keep our energy, our enthusiasm up. All right, because you and I, right, we have been students before. Do you like the lessons where you attend and the lecturer or the professor just rambles on and on, monotonous, no case study, no real life application, right? If you don't like it, then let's not have that here tonight. Okay, can you promise me that you'll be energetic, enthusiastic, and responsive? If you promise me, type okay. Type yes. Okay, type yes in the chat. Okay, great. And there's one more thing I need to share with you before I can officially begin. All right. And this thing is the disclaimer. Okay. So everything that I share with you today, right now, it is meant for education. Okay. Not a buy and sell call. Not for you to go and take action recklessly. Okay. If you need to do some investments and you like some consultation, please speak to your financial advisor or speak to us offline. Okay. Offline, then we take a look at your portfolio and we see what we can suggest lah. Can? If that is agreed on, type okay. If you don't type okay, I cannot proceed. Very simple. Okay, not a buy and sell recommendation, not telling you to exactly what to do, but sharing of ideas lah. Okay, I'm back full of energy. You know, last week I had a very bad sore throat. My nose was leaking all the way. I was like, oh my gosh. And I was thinking to myself, it's actually quite lucky. Imagine if I had a sore throat just 2 or 3 days ago and flu, right? My nose was like, wow, flowing non-stop. Then tonight, I may not be fit enough to present. Okay, so thank God it was last week and not this week. Okay, and my very first question to you now is to help me understand you. Victor says drink more water. Yes, thank you very much. Wow, the weather also super duper hot. I've been drinking tons of water like my fish. I have 6 fishes and yeah, I've been drinking like them. Okay, so help me know you better. Okay, if this is the first time you are seeing me, the first time you're attending my webinar, type 1. Okay, if you have been attending for, wow, I don't know how many times already, maybe 10 times, then type 10. Okay, so it's either 1 or 10. Wow, so many people seeing me and attending my webinar for the first time. Wow. I'm truly honored and blessed. Okay, so for those who have attended my webinars a few times, right? You know that my name is Ben and I'm working with Phillip Securities. Yeah, and I like to have an interactive style because I don't want to bore all my attendees to death. Okay, and I also like to give out bonuses. So make sure you stay all the way to the end. Can? So if you want the bonus and you promise me that you stay all the way to the end, type bonus in the chat. Yeah, chat. Yeah, I have a Telegram channel. So sometimes I do webinars for Telegram. I will say comments, which is correct. Then in Zoom, I need to switch. No, it's not comments, it's chat now, chat. Okay. So if like bonus, type bonus. Okay, Thomas, Elia, Anson, Ling. Yes. Thank you very much. And the next thing I need to share with you is I have 2 screens, okay? 2 screens. So sometimes I'll be looking left and right. It is not that I'm watching my K-drama. Again, I'm looking at what I'm supposed to share with you and I'm presenting it here. Okay, okay. Now that I've known you a bit better, I want to know you a bit more. Okay, so please type if your age range falls between 30 or below, type A. Okay, if you are like 52, 53, type D. Okay, if you are 99 years old, 100 plus years old, type E. Okay, help me know who you are, your age range, because then I can tailor my sharing accordingly. Okay, we have A, E, D, E, D, 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 E. Zhenhao, why don't you do poll? Can, but I think you interact with me better lah. E is only number. Huh? What do you mean? Victor, what is E is only number? 888. Okay, so a mixture lah, right? A big mixture. Nobody B. B have. Okay, so A, B, C, D, E lah, all have lah. Oh. Okay, good. Heart is young. Yes. Yes, we are always young, right? Children's Day just passed. I don't know how you celebrated it lah, but it's quite nice to rekindle of the past, right? Okay, so let's dive in straight into our topic. Now, what is recession, right? When we say that, hey, the stock market is about to crash, there should be a catalyst, and that whole event when the market is crashing is called a recession. Usually, when a recession happens, the market will tank. Okay, so a recession, everybody knows this, right? It is a period of contraction in economic activity. Sometimes it can be prolonged for a couple of years. Sometimes it can be very short, like the one in 2020, COVID, just probably 2 months, and we are out of, the US was out of a recession after just 2 months, right? Now, then, okay, knowing this, knowing what a recession is, that is a prolonged contraction of economic activity, how does it affect us, right? Companies are more or less keen to downsize. If they never downsize, they just kept, that means freeze in hiring, right? Wow, can laugh already, can toast xiao already, right? Usually companies tend to downsize. Then you hear a lot of recessions. You talk with your friends, and your friends say, hey, maybe my friend may ask me, hey, Ben, your company, your site, they're hiring or not? I just lost my job. Yeah, it's not a very nice thing to hear. And sometimes your friends may also tell you that, hey, Ben, last time my company will give me maybe $100 petrol vouchers every month because I'm doing outdoor sales, right? I need to travel to different outlets and locations to meet my clients. Now they say no more leh. They only pay me cash card lor. They give me maybe $150 cash card for parking and for ERP. No more petrol perks. So you see, sometimes they reduce the companies, they reduce your employees' perks, right? So that is one of the consequences of recession. Not very nice lah. Okay, but we have to know. Then the next question you'll be asking, how I know I'm in a recession? Right? Have you ever thought about this before? How I know, and who tells me that we are in a recession? Okay, so in the US, there's this organization, it's called the NBER, NBER, okay? Let me show you here, NBER. Okay. So they say essentially this line tells you if Amber say there's a recession, there's a recession. If Amber never say got recession, no recession. Okay, they are the boss. And so this is just one article to show you that Amber is quite big and it's a non-profit in the US. Now then in Singapore, who tells you that we are in a recession? Do you know who? If you know who, type it in the chat. Thomas say poems. We can say what we like but if the government doesn't agree to it, then they'll just say, no lah, who say got recession? Later they puff mommy or they puff my poems, then how? Don't sabo us. Yes, I think MAS and the MOF Ministry of Finance, and the government so basically the government, right? The government of Singapore or MAS, they'll tell you that, hey, guys, recession is here. This is what we are going to do for you. This is what you're going to do for the country. Okay? Wow. Who says MAS is always off the mark? Shh, don't say so loud. Later kena POFMA, then you know. Okay? And then you'll be thinking, okay, if I don't want to rely on other people to tell me when the recession is, or rather, I want to predict beforehand, because I don't want to reach a point where the recession is already here, but I'm not prepared for it. Then, quite funny. Something is very wrong, right? We should always be planning ahead. That is what we have learned in school, right? In life also. So the first thing, the first sign is an inverted yield curve. Okay. Let me type it out for you here. Inverted yield curve. And not just any inverted yield curve. Okay. From this, I'm using the data I have from this website. Okay, I don't know why it's a bit laggy today. Let me see more information. Okay, great. So what can you tell from this? The gray area, okay, the gray area here is recession. Okay, recession. And this is COVID, this was the COVID recession. Okay, in the US, I'm referring to the US. My voice connection not very stable, laggy sometimes. Okay, is it better now? Okay. Now, this chart, right, tells you when a recession happened and when the yield curve inverted. So let me draw it out for you. Here at the top, okay, when it's positive, the yield curve is good, positive. Okay, here below 0, it's negative, which means that there are issues really. Okay, the economy is facing some issues and we need to be very careful. Clear so far? If you are clear so far, type clear in the comments. No, not comments, chat. Okay, clear, huh? Okay, good. So above, no problem. But when it falls below this black 0 line, right, then it signifies that there are some issues that are probably creeping up. Okay, so what I did is I went to measure. Okay, measure what? From the first day it crossed to recession. How many months? How many months? How many months? Okay, I'm going to show it to you now. Let me find it here. Hang on. Let me move some things out of the way. Okay, can you see it here? So I've spent the whole weekend doing up this webinar, preparing, counting a lot of things. Okay, so the one that I want to bring your attention to is here, the dates. The dates, okay? Dates of what? Where the yield curve, okay, first inverted here. Okay, the date. Okay. Then I went to measure the duration, which gives me 20 months for the year 1988. Okay, all the way to year 1990 something. Okay, same thing. May 98, I measured 34 months. Okay, so and so forth. So I did a calculation on average. Okay, when I take 20 months plus 34 months plus 24 months plus 6 months, I divide out. What was the average that I got? 20 months. Okay, 20 months. And now we are in the 16th month and counting. So if you count you have, let's say, it really hits, recession really hits, the stock market really tank on the 20th month. That would be 4 months from now. So that is probably in February lah, after Chinese New Year. Okay. It could happen later. So let's say if it happens June 20 months, that'll be February 2024. They say, but here 34 months, very long later. Okay, let's take it that it happens 34 months later. Then you add 14 months, right? So it will be end third quarter or fourth quarter of 2024. Okay, clear so far? So I think that a recession could be here soon, next year. Shouldn't be 2025 or later lah. Or unless we break a record. Right? It takes longer than 34 months. It takes 40 something months. Then yeah, possibly. Okay. But don't take my word for it. Okay, don't take my word for it. This is just what I see, because this is just one of the factors that you can see. But if I pair it with this data set, remember in Telegram I shared that, I must pair this with a data set and I get a stronger conviction when I do that. Okay, I'm going to pair it with the unemployment data. Let me open the website for you. Okay, I'm going to remove all my drawings. So this is the unemployment, okay, from NBER. Okay, whatever they say is correct. Okay, now this is their unemployment rate. Okay, so same thing, the gray shaded areas are periods of recession. Okay, do you notice something? Let's look at from 1980 and later. Okay, so focus your attention here. Do you notice something? Before recession hit, unemployment already drop. Here drop. Here drop. Okay, and like there's like a rounding effect. Can you see? Just before the recession hit, before, not during, not after. Let me draw over again. Okay, here, do you see a rounding effect? If you can see this, type me in the chat. Okay, I want to be very clear. I want to make sure that you truly can see what I'm seeing. Perfect. Thank you so much for your interaction, for your responding. Okay, so every time the unemployment rate curve, you see that there's a rounding effect. What happens next? Let me use another color. What happens next? Boom, skyrocket. Have or not? Right? Skyrocket, skyrocket, skyrocket. Okay. So when I pair this with the inverted yield curve, I have a very strong conviction that an impending recession is really, really near. Okay, if everything is clear so far, type clear in the chat. Sorry, I don't know what's wrong with my throat today. Hang on. Okay, clear. Now, on Friday, just like 4 days ago, okay, my teammate Jeremy, he shared on Telegram in our Telegram live series. He shared that, hey, another few signs that the recession is coming is when there are plenty of reassuring headlines. Okay, when I say reassuring, it is reassuring. Okay, they tell you that, oh, you'll hear things like, oh, don't worry, there will be a soft landing. Don't worry, we know what we are doing. The question I need to ask you is, when you are in the movie theaters, okay, you smell smoke, you can see some smoke. Then the cinema operator, the manager comes in, or he makes an announcement, say, hey, don't worry, everything is okay. There's no fire. Wow, you sure everything is okay? You sure there's no fire? What would how would you feel? Will you think that everything's okay? If you think everything's okay, type okay. If you think that something is wrong, type not okay. Marco says you need Woods peppermint. Yes, maybe tonight I go and buy. Yeah, very okay, Thomas. I hope that's not the real answer, okay? Not okay, right? So if everybody keep telling you that, hey, things are fine, things are rosy, life is good, let's carry on the party. I tell them, thank you very much for your kind advice, but I need to go home now. I need to do something first. Okay. Yeah, and if you are not in our Telegram community yet, we encourage you to join us. Okay. Then you ask me, Ben, how to join? Very good question. Let me share with you how you can join. Okay. First, okay, two ways. You can scan the QR code that's on my screen, or you can click on the link that Charmaine has put in the chat. Okay. I see a lot of familiar names like Dave, Victor. I believe you guys are already inside. So no need to click, no need to scan. Okay. It's the same Telegram channel. Manchu, right? But if you're not inside yet, we invite you there. Then you were thinking, I joined already. What's there inside? Wow, a lot of things, man. Let me bring you back in time. So I share with you one shortcut. In Telegram, you can search by dates and you can go back. You can revisit the dates very easily. All you need to do is click on the date, then click select what you want, the date that you want. Okay, let's say we go back to the end of September. Okay, so like what I share with you, we have Telegram live sessions, which is like webinars on Telegram, totally free. Okay, no need registration. All you need to do is just to turn up, click join, and you are inside. Okay, we have polls, we have live sessions, and okay, we share stock analysis, right? We shout out like, hey, these are the stocks that we are looking at. This is how you can probably frame your trade. Okay, you want to take our advice, no problem. You want to do it your way, go ahead. Right? Breaking news, things that are truly important. And all those, sometimes we receive too much information, right? And I promise you, when you join this this channel, you will not be bombarded with trivial or things that you cannot use, right? Information that, how to use, how to apply, I don't know. But rather useful and practical things like trend line, how to draw, what does it really do, right? We give you examples also. Okay. Wow, Victor says awesome information. Yeah, so if you're not inside yet, what are you waiting for? Okay, join us. You can see all these. And here, Ming Han is a very good coder and very good trader. So at times he'll say, hey, Ben, I think that we can improve, we can add more value to our Telegram community by coming up with tables and proprietary indicators. Proprietary means that you cannot find it elsewhere because Ming Han is an inventor. Okay, he's like Albert Einstein. Everything also can do one. Okay, can. So yeah, I look forward to seeing you in our community, our Telegram channel. Okay. Okay. Now back to the main point. So like what Jeremy shared, a lot of good headlines will come out to make you feel good. But are they really, really good? Can? Okay. And the next thing, the next sign of a recession is when there's a hike, there's a pause in the interest rate hike. Now, when the Fed talked about a possibility of pausing rates last year, or I think middle this year, people were cheering. They say, wow, good, good, good. I want the Fed to pivot. I want the Fed to pivot. What are they trying to say? They are saying that I want the interest rates to stop rising. Okay? Because now the interest rates are rising, right? When you say a pivot, it means you want it to stop rising. Once it has stopped rising, when you say that you want the interest rates to pivot, it means that you want the interest rates to come down. But are you sure that is what you want? Do you really want the interest rates to pause? What does it mean? And when the interest rates come down, what does it mean? Okay, so over the weekend, I've also done my homework. I've drawn this out for you. Let me put it up here. Okay. Let me see what this shows me. Okay, I know already. I remove all the drawings. Okay, so essentially, right, what this chart is showing you, the blue line is the S&P 500. Okay, and this is the weekly chart. Okay, weekly chart. Let me write it out here. Weekly chart. Yeah, let's not use blue. Let me use pink instead. Okay, weekly chart. S&P 500. The orange line here is the interest rates in the US. Okay, so what I've pointed out here is this is where interest rates peaked in year 1999. Okay, so interest rates peaked here. So on the left line is where the interest rates peaked. The line on the left. Okay, now then what is the line on the right? The line on the right is where the stock market peaked. Okay, the S&P 500 peaked. So let me write it down for you here. This is where the market peaked. So far, so good. If so far, so good, type good in the comments. Not comments, chat. So I know that you are following. Very good, Thomas. Thank you. Okay, great. Now I know that you guys are following me. I can move ahead. Now, do you notice here? This year 2006, June. Okay, the Fed says, hey, I'm going to pause interest rates. Okay, here, market peak. Okay, same thing, pause of interest rates here in, I think, year 19 or year 18, year 18 December. Okay, and the peak of the stock market was in February 2020, just before all the lockdowns. Now, what is so significant? Do you notice? Let me use another color. Let me see what colors I have. Let me use this purple. Okay. Now you see, when the interest rates, right, maintain, stock market what happened? Rose by a bit, right? Then drop down all the way. Okay. Interest rates remain same, stable. Not stable, remain the same. Okay. Interest rates hike, pause. What happened to the stock market? Flew before coming down. Here, when the interest rates was paused, stock market flew. Okay, then interest rates also was coming down already. The stock market continued to fly. Before, tanking. This is the global shutdown, right? Global lockdown. So now, interest rates, if it stagnates, it remains, what do you think is likely to happen? Can you tell me? Is the market likely to rise or fall? Based on what you have seen here. Here, and here. Okay, type it in the chat. Chat. Yeah, chat. I got that right. Yes, rise. Anybody say fall or not? Okay, I think it's quite clear, right, from this chart that the stock market tends to rise for how long more? A short while more. Okay, and what happens after that? A tank. Things crash. The stock market crash. So I think, okay, my opinion is that it's the same as yours. The stock market is likely to go up. Okay, then come down all the way. And things are going to get very ugly when it drops down. Okay, later I will do you a favor by measuring each fall, each collapse. Let me use another color. Okay, later I'll do you a favor by measuring the collapse of each recession. Okay, from peak to trough. Then you know how much to expect. Can? If all is okay so far, type okay in the chat. Great. It's really nice that you guys are following me so well. Okay, then I can move on and I can share more good stuff with you, right? Remember, I have a bonus that I want to share with you guys. Good. So now that I can move on, let me close this, leave this here, close this. This one, I remove everything. I don't need all this now. Okay. Okay, so Thomas is asking, most of what I've shared are past data and patterns. Will this round be different? Let's see. Let's see. Because we are just halfway into the webinar, I have a lot more things to share, and that will probably help to aid you towards forming your own conclusion rather than let's see how it goes, right? I mean, I don't like that feeling to be hung out there and let's see how it goes. And you might as well don't tell me. Right? You don't say, you say and you never say no difference, right? But later, what I will share a bit more to help you find your own conclusion. Can, Thomas? Can? If can type, can. If can type, can. Very Singlish. Can. Okay, very good. Oh, I like the way you guys are responding to me. Okay, I have another thing to share with you, and that's the impact of a recession. Okay, so very quickly, can you tell me what are the impact of a recession? Okay, what do you think will rise? Definitely unemployment, right? What will rise? What else will rise? Don't know. Okay, I have a table here. So what will rise, right, is unemployment, definitely. Okay, and stress and discontent, because like, wow, if I am unemployed today, I have a family to feed. Okay, I have my, if you have a house, you have a car, you probably have loans, so that will add to your stress, and you'll be discontented because at work you are doing the same thing or even more things, but your pay is probably get a small pay cut or even quite a substantial pay cut, and there will be discontent probably between the haves and those that don't really have that much. Okay, crime rates are likely to rise, especially theft, scams. Talking about scams, yesterday I received a notification from my credit card bank. They said that, hey Ben, somebody tried to pay for Deliveroo delivery, and I looked okay, but I didn't order any food. Then I looked, the currency is in euros, 54 euros. Then it's like, what's going on? It's a fraud, right? So I think somebody stole my credit card details. So immediately I went to block. I went to block the use of that card. So crime, although it's prevalent, I think that the rate will increase. Okay. Allow delivery also want to use my credit card. If you use small purchases like $1-2, no need OTP, I won't be notified, right? That one need OTP, I'll be notified. Okay. And then for politics lah, for corporate lah, in the corporate world, populism may start to surface. Okay, so you want people to tax the rich. You want people who will come up with nice, catchy slogan, build that wall, tax that rich. Okay, I don't know who, I'm just saying only, I don't know who, okay? If that reminds you of someone, it is not intentional. Okay? And there will be greater financial scrutiny probably by your employers, by governments. Like bosses will want to go through every receipt and say, hey, there's a cap on this, cannot exceed. Why are you eating out so much? Why are you doing so much entertainment? Okay, they may ask you more questions. What will drop? Consumer spending will definitely drop. Okay, even on staple goods. So for example, rice. Instead of eating 2 bowls of rice, which will cost you maybe $2, $1.60 to $2, you eat 1 bowl of rice and you buy 1 loaf of bread. And that 1 loaf of bread can last you for the entire day or maybe 2 days. So you cut down on your spending, even on staples, right? Cai peng, maybe instead of 3 dishes, 4 dishes, you cut down to 2 dishes. All right. Then stock market fall. Business activity also slow down for most companies. Interest rates drop. Confidence, business confidence, consumer spending confidence, investors' confidence will shrink. Okay, will shrink. And of course, income and your perks may just pew, bye-bye. Of course, I don't hope for this to happen to you, but this is reality and we need to be informed. Okay, we cannot hide, bury our heads under the sand. Can? Okay, so why Chan is asking, where is GDP and bonds? GDP may fall. Bonds, let's explore bonds later. Can I have a section where I want to explore bonds and gold. Can sounds interesting or not? Bonds and gold. If you think it does sound interesting, type bonds in the comments. No, not comments, chat. So today I'll be exploring quite a number of things. Okay, I'm sharing with you the macro things. I'm sharing with you the personal things. How will it affect you? How will it affect the company? How will it affect nations? Then we go into the investment vehicles and the instruments and, of course, strategies. Okay, any industry that will benefit from recession? There probably will be, but I don't know. Okay, if you ask me something that's foolproof, it's probably actually because spending will drop, right? People bargain, people negotiate, profits margin will thin everywhere. Benefit government. This one bo pao, not confirm one. You see, during COVID, the ministers and the president, they also took a pay cut. I think they didn't take salary for 2 months. They pledged not to take salary for 2 months and they reduced their salary voluntarily. Okay. 2 months. This one you tell them, you don't tell me. I got no power. Okay. And as I shared, right, stock market, definitely, okay, I won't say definitely 100%, but 99.9%, okay, will drop. And it will not just drop like that. You'll go on a free fall, like waterfall like that. Okay. And I'm going to share with you the magnitude and the duration. So if you are ready for this, type ready in the chat. Yeah, chat. Ready. Okay, let's look at SPY. SPX. You know why SPX? SPX has a longer history. Okay, SPY has a shorter history. So let's say I use the weekly chart. Now, what is this? What are all these lines? Oh, okay, let me remove them. Okay, so the first recession we are going to focus on is the dot-com crash. How many of you are familiar with the dot-com crisis? Type me in the comments. Not comments, chat. You see, now you really believe, right, that I do a lot of Telegram live together with my teammates. Only in Telegram, then we talk about, then we say comment. Chat, okay? Here is chat. Okay. Okay. I was also born. I mean, I think I was in like secondary school when this happened. So I may not be fully aware, but now I know what it is. Okay. Oh, let me use another tool, this tool. Okay, so I'm going to measure from the peak to the trough. Okay. Can you see? Drop by this percent for how many days? Okay, so I'm going to write it here. I'm going to write it here. So it dropped by about 50.7% for 9 to 4 days. And 9 to 4 days, mind you, is nearly 3 years, maybe 2.5 years. If my math is correct. Wrong. I think it's 3 years. Yeah, my math is horrible. Okay, don't laugh at my math. If my math teacher is here, I'm so sorry. Okay, nearly 3 years. Okay, then let's fast forward. So this is the .com crash. Let's fast forward. Let me remove these two. Okay, let's measure. This is the 0708 great financial crisis. Okay, back then I was in university. So now you know my rough age. Okay, slightly lower. Okay, so this is it. Let me write it down. So you can see about minus 58%, 511 days. So I'm going to write here 58% lah, okay? 511 days. This is about 2.5 years. Okay. No, wrong. This is not 2.5 years. This is 1 year, 1.5 years. Okay, this is about 1.5 years. Okay. Now, let me... Okay, so let's compare between these two. I think the COVID is an anomaly because the COVID crash, it's only like what, 30%. Okay, 30% over a very short period of time. Yeah, can you see 35%? Let me write it down for you. So COVID, the crash was about only 35%. It lasted for 34 days, 1 month. Okay, so this I think is I would term it as an anomaly. Okay, so let's not focus on the anomaly. Let's focus on the usual thing, on the usual crash. You notice something similar? Do you notice something similar here? First, let's look at the magnitude. How much? It's about 50%, right? Okay. Second, it takes more than about 1.5 to 3 years, which is what Amber mentioned, right? Recession is a prolonged period of economic contraction. Okay, so what can we expect in a recession? What can we expect stocks or the stock market to do? We can expect the stock market to crash by about 50%. And this bear market could last anywhere between 1.5 years to probably 3.5 years. So far, so good. If so far everything is clear, type clear in the comments. Chat. Very good, very good. Yeah, very good. Okay, now I'm going to remove all this. Okay, remove all this. Let's take a look at individual counters. Now, for individual counters, I'm using this website now. Let me send it out to you in the comment section, in the chat. Okay, so I'm using slickcharts.com/SP500. Okay. Now, from here, I can see that the major components, okay, are Apple, Microsoft, Amazon, Nvidia, Alphabet Class A, Meta Platforms Class A, Alphabet Class C we ignore, okay, because we already have Class A over here. Tesla, Berkshire, Class B, United Healthway Group, Eli Lilly and Co, ExxonMobil. Okay, these 10, 12, 11. Okay, so let's take a look at the first one, Apple. So yeah, see what happened in in year 2000 and year 2008. My God, why am I typing AAPL? Why I type so many A? Okay, so let's zoom back to year 2000. The turn of the millennium. Okay, back then Apple was still quite small, quite a very, very small company, $1+ per share. Nevertheless, we can measure from peak to trough and the duration. Okay, can somebody with your very sharp eye tell me how much did Apple drop by in the year 2000 in the .com crash? Okay, to help you, let me underline the number that you're supposed to look at here. Minus 81%. Minus 81%. It's like $1 becomes how much? 20 something cents. So if a stock can crash by 80 something percent, I don't know how long it'll take to recover. Okay, imagine those people who bought here at the peak. Wow, when break even? I don't know, man. Don't ask me. Okay, those who bought here, when break even? I also don't know. You see, here, wait long. 2 years also haven't recovered yet. Okay. Now, let's go and take a look at the great financial crisis in 2007, 2008. Around here. Lah. Okay, same thing. I'm going to plot out the peak and the trough and measure it. Okay, can someone else, besides Sam, type in the magnitude of the drop while I sip some water? Thank you. Thank you, Anatia. Anahita. Thank you, Iris. 61%. But this time, if you bought the peak, you are very lucky. Break even very fast. Within 2 years, you have broken even. But for the first case in the .com, heart very, 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 very painful. I think crushed, shattered. That are the words to use. Okay, and you see, it tumbled for 393 days, more than 1 year, 3 months. Can you take it or not? I don't know lah. Maybe you can. My heart very weak. Cannot. Okay, so that's Apple only. Let's see the next one. Okay, Microsoft back then was a very big company already. I don't know if you can recall, in 1990s, a lot of us, we were already using desktop, but we were using 56K mobile dial up. Do you remember that? If you belong to the same era as me, or you know what I am talking about, type me in the comments. What comments? Type me in the chat. Don't tell me that I'm the only one. Lao cock one. Use dial up. Back in the 1990s and early 2000s. Victor, thank you. We are good buddies. Kyung Wong. Okay, good. Okay, so let's take a look at Microsoft. Let's go back to rewind to 2000. So this is the crisis. This is a recession, okay? Same thing from the peak to the trough over here. Okay, slightly more. Okay, so minus the drop, 66%, okay? 357 days, 1 year. Okay, now let's take a look at the great financial crisis in 07-08. Yeah, here. Here, let's measure. Okay, the GFC, I write it here, 60.5% for 90 days. This is 1+ year. I think about 1.5 years. Okay, so what can you tell from these two? You can tell that when stocks crash, they don't just crash 10%, 20%, 30%, 40%. It can be 50% up to about 90%. It is that scary. It is the fact. And you think that all these technology stocks, okay lah, show me some old school counters lah. Can. Do we have an old school counter here? Berkshire Hathaway lah, Berkshire Hathaway. Let's take a look at Berkshire. BRK.B. Okay, this one everybody knows, right? Warren Buffett's company. Okay, let's see how it fared. During the dot-com crisis over here, the drop that time was 52%. 6 to 3 days. This is about 2 years. Okay, fast forward. Great financial crisis here. Let me write it below here. So the drop was about 55.8%, 455 days. This is about 1.5 years. Do you see that it is very consistent? The drop is about 50% or even greater. And the duration taken is always 1+ year to about 2-3 years. Okay. Now YC is asking, Microsoft crashed 50% last year. Will it still crash another 50%? Maybe. Let's see Microsoft. So assuming this is the peak, okay? Because just now, remember, we say that the stock market is likely to rise, right? When the interest rates pause, right? Stock market likely to rise. So Microsoft could rise and make a newer high before coming down. Okay? But let's not assume that it makes a higher high. Let's assume that this is the highest peak already. Okay? So let's say that is the peak. Let me remove everything here. No. Let's say this is the peak. Where is the 50% mark? Somewhere here. So if that is the peak, this is the 50% mark, you can keep a lookout when it hits about $178 or $180. Okay, but the thing is, we don't know where the peak is yet. So because we're like just now what I shared, right? When the stock market rally, stocks tend to follow also. Okay, when the interest rate pause. Okay, before things drop. So from here to the 50% mark, it could be maybe until here, about 200. Let's see how it goes. Okay, this one I really don't know. This one we must see where the peak is. Okay, without the peak, we cannot really predict or foretell. Okay, if everything is clear so far, type clear in the comments. Type comments, chat. Okay, I still have quite a bit more to share. So if it's okay that I overrun by about 10 or 15 minutes, type okay. Okay, YC says both crises happened before the central bank implemented quantitative easing. Central bank, I think you are saying, central bank only started to implement quantitative easing from the 2007-2008 crisis. Yes, the mechanics may change a bit, but the whole principle, the whole idea is more or less similar lah. Okay, KC says important data tonight. Correct. A lot of data released these few days. So it pays to be cautious. Okay, not too overly optimistic and jump in. Just like that. Okay, so thank you very much for giving me the permission to overrun by 10 to 15 minutes. Okay, Raymond Ng, what's the conclusion? Yeah, I haven't reached a conclusion yet. Hang on, Raymond, we are getting there. Now, have you heard of this saying? Buy when there's blood in the streets. If you have heard it, type yes. Okay, let me copy it here. Buy when there's blood in the streets. Heard before, no? Very famous one. A lot of people like to quote. Okay, some attribute it to Rockefeller, some attribute it to Warren Buffett, some I don't know lah. It doesn't matter to me who said this. The most important thing is what is the context? How does it apply? Right? Don't follow blindly. Okay, don't follow blindly. Okay, like people say, hey, you should do dollar cost averaging, DCA. You should do dividend investing. There's a time, a place, a context to do that. What are they? What is this? Okay, can? If can, you type context to help you remember. Okay, type context to help you remember. Yes, Rothschild said that. Warren Buffett copied. Wow, that one I don't know, okay? Now, recession can be a good, can be bad. I think someone earlier in the webinar typed in the chat saying that, hey, there are opportunities. And that is what I totally agree. In every crisis, there's always an opportunity. The problem is, do we know how to spot the opportunity? Second problem is, are we prepared to spot the opportunity? Third problem is, do you dare to take the opportunity or not? Right? Sometimes I say, hey, look at this stock, looks good. Then I ask, hey, how many people took action on this trade idea? Then nobody raised hands. Nobody say me. So then I share 4. I share because I think that there's a good possibility of it going your way lah. Okay, not saying that it is a trade call. No, you have to do your own homework also. Okay, you have to come to your own conclusion. So a lot of times, big money, huge money is made during recessions and the immediate aftermath. Then now you also know that a recession takes place almost every 10 years, like clockwork. Year 2000, year 2007, 2008, then 2020, another one coming soon, but 2020 a bit of an anomaly lah. Then 2008 until now also a bit of an anomaly, 15 odd years really. Okay, so about 10 years lah, about 10 years. Then, you know, just now earlier on, right at the start of the webinar, I asked your age range. Why? Because it is to help us understand and remember. Myself, I'm in my mid-30s, so I belong to the 30s to 40s group lah, right? 30s to 40s group. Then I'll be asking myself, if a recession only happens every 10 years, let's say just assume 10 years, I only have 3 more to catch. But practically, I only have 2 more to catch, and I must catch them well. Because I don't want to catch them when I'm 60 plus years old. The last one to make money. Walao. By then, I have to suffer a lot. I do it until 60 plus years old. Imagine going through 20 years or 20 something years of turmoil. Then finally I see some money. Wow. Okay. So if you belong to the younger category, very good. Seize the opportunities ahead of you. You have probably 2 more, 3 more actionable recessions to get your act together, to get your act right. Okay, not get your act together, but rather to get your strategy right, your thinking, your mindset, your behavior, your attitude towards money towards investments. All right. But for those who are in the golden years, who have more experience, right? Who are wiser than the younger ones, this is probably your last chance to get it right, to get it done well. For who? For yourself, for your family, for your kids, for your grandkids. Right? Do you agree with this? If you agree with this, type agree in the chat. Okay, so the next portion, I'm going to share with you the tools, the instruments that you can explore, you can consider. Why explore now? Why consider now when a recession hasn't hit yet and the stock market is still going up? Why? You need time. Right? You need time to go and Google, hey, what is this all about? What is that all about? How can I use it? I need to read the fine prints. I need to understand a bit more on the mechanics. I need to save up. Right? Cancel that trip to I don't know where, to Antarctica. Okay? Maybe instead of flying there for an expedition, hey, we go Jurong, the what that science center, is it? The one with snow and ice. Or instead of going until Antarctica, we go Thailand, we go Thailand, go Vietnam. Or save up a bit more. Okay, if you are ready to find out, type ready. Because I'm ready to share. Excellent. Excellent. Okay, I'm going to copy and paste some things. So the first thing, okay, I think that you can do, very simple one. Take a look at your current share portfolio, ETFs, shares, investment portfolio. Can trim one? Try to trim. Why? Now the market is going up, okay? Whether it will make a brand new high, like Microsoft, will it make a brand new high? Will it go up and make a brand new high here? Or is this already the high? So will it just go up here and then fade? We don't know. This one we don't know one. Okay? Because just now we say market likely to go up, correct? Go under here, the previous high, or exceed the previous high. We won't know for sure. We won't know for sure. Okay? So it's a good idea, I feel. Trim your current shareholdings. Second, consider CFD. Consider CFD. What is CFD? CFD allows you to profit from the price difference. Meaning when you go long, that means you buy, you expect the price to go up and you sell. Then that difference in price is your profit. You can also short. That means you sell first at a high price. You want it to come down. When the price falls, the price difference, you make that profit. Okay. And I will not spend another half an hour or 1 hour elaborating on what CFD is, because my colleague Ming Han, my manager also, okay, he has done it for all of us. If you join our Telegram channel, you'll see it there. Okay, you'll see it there on 7th of October. Okay, he has done it. What I'll do is I'll show you how to get it again. So first thing, join our Telegram channel. Okay, let me get you the link, the Telegram link. Join our Telegram channel here in the link. And for those watching the recording, because they can't attend today, this is the QR code. Okay. So 7th of October, I open Telegram. Click here, 7th of October. This is the one. Okay. This is the one. Protects and supercharge your returns in any market conditions. Okay. What is CFD? Totally covered by my manager, Ming Han. How you can minimize your CFD trading costs, shared with him beautifully. 2 trading strategies, right? Watch it, rewatch it, watch it, rewatch it. Let it sink in, internalize. Then when you look at the charts, this is a strategy that Ming Han shared. I can apply it. Okay? Promise me you'll watch it. If you will watch it, type promise. Okay, we don't do webinars for fun. Things that you hear already. Oh, nice to hear. That's all. Storytelling, that's all. No. We do a bit of storytelling. We want you to understand certain things, and most importantly, this must be actionable. Okay, huh? I don't like to give people rubbish on. Okay. Now, if you want to explore, Phillip has CFD. Okay, Phillip has CFD. You want to explore more about CFD? I invite you to come to our website here. Okay, I will send you the link here. By the way, we have MT5. MT5 is the one that can reduce your CFD trading costs because the commission is lower. And that's not the best thing. Still got lagi better thing, okay? Still got even better things. What is this thing? We have a promotion for foreign exchange, Forex. Okay, Forex. This is the one. Okay. Yeah, Shermaine has already put the link in there. Okay, the bit.ly FX promo webinar. Okay, go and take a look at this. It's almost like free money, 360 Sing dollars given to you if you perform 28 trades over 3 months. And so 8 trades, you get $20. Okay, you do 28 more, that means 36. 36 trades altogether. Okay, for 3 months. So $120, right? Times 3. Maximum is 360 here. Quite simple, straightforward. And so I won't spend my time explaining. Okay, you can go to the website, take a look at it for yourself. Okay, the spreads are remarkable, impressive. Okay, if you promise me you're going to take a look at all these, type promise again in the chat. Thank you very much. Thank you very much. All right. Now, so apart from CFD, are there any other tools? Okay, there are. MMF. Okay, MMF stands for Money Market Fund by Phillip. Okay, alamak. Money Market Fund. What does it mean? It means that if you put your money in your Phillip trading account and you give Phillip the permission, you consent. Okay, you give us a consent, Phillip the consent to use your money to invest in safe market instruments, money market instruments. Will give you a bulk of the returns. So right now, I think it's about 3.5% for Singapore dollars. And for US dollars, the return that you can get is about 5.3%. Okay, so it's pretty good. And this is one of the easiest really. Yeah, and on, I think 2 weeks ago, again, no, last month, 2 weeks, last month, my teammate, Jeremy, he did a whole webinar on MMF, Money Market Fund, okay? How to enjoy 3 to 5% returns on your spare funds with Poems. Poems is Phillip's trading platform. So here he shares with you what is this, the track record, okay? Compared with other instruments and how you can opt in for it. Can? Good stuff or not? If you think this is good stuff, type good. Okay, as you type good, I'm looking at the questions. Okay, so first question. Ling, how different is Poems and Poems MT5 platform? Okay, our MT5 platform, right? It's the latest. It's the most comprehensive one. Okay. So there are more advanced order types. more sophistication. Okay, Casey says that US retails exceed forecast. Does it mean that recession is still far away? Okay, when you're talking about all this data, sometimes I find that they are quite lagging and prediction may not come true. Okay, so we look at things that have the ability or has proven itself to be reliable, to tell us that a recession is near. We rely on that. Okay, so sometimes I don't share, like every Sunday, right? My team and I, we come up with the important events. These are the most important events. There are a lot of other announcements which we think that won't really affect the stock market and doesn't actually give you a very complete view of the market lah. So we don't include them. Okay, Casey, okay? Marco, what about non-farm payroll? Have lah. Maybe this week don't have lah. That week don't have lah, but I remember typing it somewhere lah. Oh, so when it is available, yeah, of course we'll share it. Non-farm payroll, there here lah. Non-farm employment change, non-farm employment change. Okay, can Marco? Okay, EG, raise your hand. EG, can you type your question? Okay, while we wait for EG to type, let me move on. Now, you are thinking of shorting the market, but you want to short Singapore's market. Can you do it? The answer is you can only use CFD or SBL. Okay. Okay. CFD or SBL for Singapore. Okay, Singapore is different. MAS doesn't allow you to short sell overnight. So if you shorted shares at 3 p.m. today, by 5 p.m., you got to buy it back and return. After that, Philip will call you and say, hey, did you short any Singapore shares? If you did, then we got to do paperwork and we got to lend you the shares. This one can be a bit more confusing, a lot more paperwork, but I'm going to share with you because it's an alternative that you want to consider. SBL has no margin call. Have. Everything SBL got margin call one because you are borrowing the shares from Philip, right? So here you can see all these things here. There's a margin requirement ratio, right? If it falls below this, below 120%, margin call, we'll notify you. Okay, so don't worry about this website. I will copy and paste it here. Okay, so that's SBL. Now, of course, some people tell me also, hey, Ben, can also buy inverse ETS, right? Can, but you must know how it works. Because the mechanics, right, is slightly different from stocks. It's totally different from CFD. So inverse ETFs, let me type it down here. Okay, inverse ETFs, I think every day they will rebalance it. Okay, every day they'll rebalance it. And I tell you, my colleague has done up an article, very nicely written article, all about inverse ETF that you must know. Okay. Of course, the next thing you can do is hold cash lah. Okay, hold cash. Wow, no space really. Too many good stuff. Let me find some space here. Hold cash, but please don't hold cash for the sake of holding cash. Okay, have a clear reason why you're holding cash for. You're holding cash, waiting for opportunities to come to own assets. What assets? Like maybe a business, right? Maybe a new contract, maybe machinery, inventory, maybe stocks, maybe a property. Okay, not just hold cash, put under your pillow, put in the Milo tin can. No, please. Can, if all these tools and instruments are clear, type okay for me in the chat. Yes, chat. My God, after 1+ hour, I still mixing up with comments and chat. Okay? Type okay, type okay. Can, Okay, I'm going to remove everything, Okay. Then people ask me, hey, Ben, should we even look into gold? Should we look into bonds? Let's find out. Right, this is an interesting part. I think just now, earlier on, someone asked me, hey, what about bonds? What about gold, right? Let's find out. Yeah, not indicator. Let me change this. Weekly line, remove everything. Okay, so, oh no. Okay, so let's start with bonds first. Bonds, Let me open this website to show you the bonds. Okay. Okay, so these are bond ETFs. Okay, BND, they invest in treasuries. AGG also, BNDS also, TLT also. Okay, VCIT, VCSH, these two invest in corporate bonds. You can see here corporate, okay, corporate bonds. Now let's look at one treasury and one corporate bond. We compare. Okay, so for that, we take BND first. Okay, if you understand, type BND in the chat. BND. B for Brunei, N for Netherlands, D for Denmark. Okay, in the meanwhile, I'm going to put BND here. BND sounds like Bond, right? James Bond. Okay. Then I'm going to put SPX as to compare. Okay. New pane. Close. Let's go to year 2008. No, year 2000, 2008. Like that, BND, maybe not. Let's try AGG. Okay, let's try AGG. So sorry. Can you type AGG in the chat? AGG also don't have year 2000. Okay lah. TLT lah. TLT should have lah. Also don't have. Okay lah. We just use TLT, okay? TLT. Now I'm going to mark out a few things. I'm going to mark out the peak of the stock market, the trough of the stock market. Okay. So this for 07, 08. I'm going to mark out again here. Here. The pre-COVID, COVID crash. Here for now. And here, the trough for now. Okay, why I mark this out? Because I want to take a look at something. I want to see if there's a relationship, rather a negative correlationship between the price of bonds and the stock market. Now, here, when the stock market was rising, bonds flat. Can you see this? Stock market dropping, bonds flat before spiking, then drop. Okay, stock market rose, bond market already started to drop. Okay, continue rising all the way, bond market rose. Plateau. Okay, but here before it plateau, the stock market plateau, bonds already drop. Plateau, bond market rise. Okay, so far so good. Alamak. So far so good. If good, you type good. Following. So far so good. Here, stock market rose. Sorry. Stock market rose, bond market drop. Can you see this? Okay, but before that, it continue rise. So from this short period, year 2003 to year 2018, is there a negative correlation or not? Sometimes. Sometimes when stock go up, bonds come down, but this part flat. Sometimes come down a while later, then the bond shoot up. Can you see this? Come down for some time already, then the bond shoot up. Then market climb. Bonds drop first before climbing together with the market. So this relationship is actually a bit flawed. No, or rather I would say not really correct. Not really there. See, this is correct, right? Then later, bond market up, stock market also up. Stock market up, bond market sideways, come down, go up. Come down all the way. Right, so you tell me if there's a negative correlation. All right. Okay, so let me remove all this. Let's go and take a look at VCIT. Okay, the corporate bond one. VCIT here. VCIT. Let's see VCSH instead. See if there's more history. Okay, about the same. So for corporate bond, okay, let me erase this part because it's not relevant. For corporate bonds, okay, let's see. Let's find out if there's a negative correlation or relationship. Okay, so we look at the stock market first. Rose, right? Plateau for a while. Rose, drop, rose, drop, rose. Okay, can we see this? Rose, plateau, drop a bit, rose, drop all the way, up, down, all the way. Can you see? So what conclusion can you draw? Can you type it in the chat? Is there a positive correlation, negative correlation, or somewhat no correlation? What is your conclusion? Okay, as you type, let me drink some water. Yeah, somewhat, right? Sometimes inverse, sometimes positive. So is it a good gauge just to base on bonds to tell you whether the market is coming down or the market is going up? So not that accurate. Okay. Now, if we look at your ETF adjusted for dividend payout or just price return, let me see. What did I do? So this is, I think it's non-adjusted. Yeah, even adjusted, then there's a positive correlation. Okay. Yeah, so if you want to use not so much of a correlation, so here a bit flat, right? Here also flat, but the market chong up. So either way, somewhat, the relationship is not that strong. Okay, so are you ready to take a look at gold? If you are, type gold in the comments. What comments? Chat. My goodness. Gold, okay. For that, I'll use gold futures because gold futures has a longer price history. Okay, let me remove everything. Remove here. Remove. For here, we can see year 2000. Okay, so same thing, I'm going to plot here, the peak and the trough. Here, the peak and the trough here. Okay, same thing over here, the peak and trough. And now where we are. peak and possibly the trough for now. Okay. Okay, let's go on a journey together. Stock market go up, right? Go come down. Okay, inverse, right? Go flat, stock market come down. Stock market go up, go also go up leh. How come? Right, then go up, come down. Stock market drop. Stock go up, stock market go up, stock market flat. Before that, drop all the way. Then flat. Okay, flat that time, stock market go up. Stock market go up again, go also go up. Right? And go continue go up, stock market chong. But after going up, flat, and like coming down already. Can you see? So, I mean, a lot of people keep telling me, hey, time to buy gold, right? But when you look at this, is gold a really good hedge? Is gold what you should be looking at? You draw your own conclusions. Right? Because every time I share with my clients, hey, gold lah. Sure or not? I don't even know if you should be looking at gold, you know. Yeah. So I rather show you this than say yes or no. Right? Then rather say yes or no. So you form your own conclusion. Okay? Gold should be compared with inflation. Yes and no also lah. Yes and no. Can? So far clear? So far clear, type clear. Okay? I have a bit more to go, so I think I need until about 9:10, if possible, 9:10. Okay? This is probably the longest webinar I've ever conducted. Macam going to become like seminary. Of course. Can I? Okay. Then your question to me will be, then Ben, what strategy should I employ? My answer to you is very simple. Trend following strategy. Trend following strategy. Okay, follow the trend. Why you fight against the trend? Right? So let me show you. When the stock market is in uptrend, look for buying opportunities. Okay, look for buying opportunities. So for those who are in my team's Telegram channel, you know that I've been emphasizing on long trades, that means buying. I haven't mentioned anything about shorting, short selling. Okay, can those in our Telegram channel confirm this? Type yes if I have and my teammates have been emphasizing on buying, going long. Okay, there you have it. It's proof. Okay, yes, we emphasize on buying, not short selling. Got people sure ask us on, hey Ben, I want to shortly. I say can. How? You got to be very quick. Within 1-2 days, you got to be out. If not, then the market will crush you. Okay, so follow the trend. And how can you follow the trend safely? By using the STARS framework. Okay, STARS framework. You have no idea what this is? No problem. You join our Telegram channel. Sooner or later, you'll understand all this. And we are also thinking of holding a course. 80 is for what? Trend line. We are also thinking of conducting a course. Okay. Can use the STARS framework. Next, what is the next strategy that you can consider? If you are more experienced, you can do day trading. But let me say again, this is only for the more experienced. If you are starting off, you only have 1, 2 years, 3 years of experience, go for this. Okay, follow the trend. Hold your trades for a few days to a few weeks to possibly even a few months. Okay, if you are more experienced, go for this day trading, where you hold for a few minutes to few hours. Clear so far? If clear, type clear in the comments. If it's clear, type clear. Jamie says, good session. Thank you very much. Okay. I hope that this session has been power packed, but I'm not done yet. So please stay. Wow, Ben very long-winded. Next time don't join. No. Not next time don't join. Next time, when we say we end at 8:30, plan for your next activity to be after 9 o'clock. Yeah, okay. Now then, what are there strategies that you should avoid or you should consider to hold, not use it yet? Are there? A lot. Okay, a lot. First, okay, let me copy and paste. Very popular one. You always hear this. Dividend investing. Why? If the market is coming down, you are catching a falling knife, right? Then whatever you buy, becomes cheaper and cheaper, your heart pain or not? Oh, my heart very pain. If the market goes up, continues to go up, right? We anticipate go up and come down like that, right? Okay, maybe not so. Yeah, maybe that much, right? Let's say goes up 4,008, come down to about 2,004. Yeah, okay. So this is about 50%. Imagine you keep buying now, keep buying now. Dividend investing, I keep buying. Okay, then I buy 2 times enough. Wow, your yield here, maybe 2%. Okay, as it goes down, your dividend yield, maybe 5%. Okay, your dividend yield. But the price dropped by how much? 50%. Must times how much? Must 10 times, 10 years. Then you break even. I mean, this simple math. I'm not saying that price will not come up. Let's say price drop. Okay. To break even, it takes you a super long time. Okay. Not 10 years for sure, but you get the hint, you get the idea. Okay. Clear for dividend investing? If clear, type okay. Okay, if Fendi is asking how to join the Telegram channel. Telegram channel, I share with you the URL again. Where is it? Let me find. And not URL, the QR code. So if Fendi, please scan this QR code to join our Telegram channel. Here, okay? Okay, next question. Ivan Ho, how do you measure sentiment? Join my Telegram channel, you'll start to understand how I think, how I look at things, how I analyze, how I tell market sentiment. Okay, very basically, it's about the size of the candlestick and the color, the predominant size, the predominant color. Okay. Mark is asking, how about combining short call with dividends? Okay lah. Actually, you can do a lot of strategies. You can do multi-legged option strategies. You can do shorting and combine everything together. But the question you got to ask yourself is, later you confuse, then how? Or if one part goes against you, then you got 5 other moving parts. Wow, how to manage? Okay, that's why I like to do things the simple way. Buy means buy. Sell is either take profit or short sell. Use stock, use ETF, or use CFD. You want to use all the funny things like what not funny things. You want to use the more complex things like DLCs. You want to use the more complex things like options. You must know what are the moving parts. Okay, like inverse ETS, what are the moving parts? How do you protect your profits? How do you protect your trading capital? You must really know. CFD, very straightforward. Stock, ETF, very straightforward. Okay, Mark? Okay. Now, dollar cost averaging, very good. Not for now also lah. Dollar cost averaging, please. Why? Imagine dollar cost averaging every month you buy. Now you keep buying. Now you buy. Now you buy. Now you buy. Now here, minus 50%. Wow, very ugly. Let me redraw. Here, okay, here. Minus 50%. It's not buy. It is bye-bye. Why? You keep buying Keep buying Then where's your break-even price? Your break-even price maybe here You buy under here okay? Okay, maybe your break-even price not so high. Okay, go up here, come down, right? Okay, you stop buying here. This is the end of the recession, end of the tank. Okay, maybe your break-even price is here. Then you must wait for how long to reach your break-even price? There are a lot of trading opportunities that will come within this time period and you miss it. Why? Because your money all stuck here already. It's about opportunity cost. Okay, opportunity cost. It's about time also. Like just now I asked you, right? How many more 10 years do you have? How many more 5 years do you have? Just let me show you an example. Real life scenario. Okay. Real life scenario. This one, I use the S&P 500. Okay. Now, let's say you do DCA, dollar cost averaging. Let me write it down here. Okay, dollar cost averaging. You buy, you buy, you buy. Come down, you also keep buying. Where's your break-even price? Maybe here. Maybe here. When then you break even? Okay. Let's say here. This is your average price, right? When do you break even? Here, but after you break even, you lose money again. Then you reset here. So can you see on the here, right? The date here. The date here. This is April, year 2002. This is November, year 2004. 2.5 years. 2.5 years. For guys in the army, for guys in Singapore, we must go army. I go army, come out already, you still haven't made money. You haven't break even yet. Wow, very sad. 2.5 years, a lot of things can happen. Can get married, can have kid. Okay, if your kid is already 20-something years old, 30-something years old, maybe you can already have a grandkid. Okay, it's very painful. And it's something that I do not wish it to happen to you. Okay. Then for those who never do DCA, they just buy one shot. They just hook. Wow, news say good, optimistic, right? Remember, Jeremy shared with us in Telegram that when the news keeps saying that things are rosy, don't worry, don't worry. Usually very high already. Then you project it forward. You project it forward. If you just follow the news, you hum tam, just wait here. Okay, just wait. This one move here. You wait here, you buy here. Here you break even, you feel like hero. Wow, really go up there. Then lose money like all the way. When do you next break even? Here. Can you see? This is March 2000. This is April 2007. Wow, my BTO built already. 7 years. Maybe you become Akong Ama already. 7 years, your car 7 years old, left 3 years COE. So you see, the time here is not utilized. You get what I'm saying now? It's time wasted. So when you hear the saying, timing is not important, time in the market is of essence, it really depends. If you buy here, you tell me timing not important, I got nothing to tell you. Okay? You tell me time in the market is important and you take 7 whole years, don't talk about dividends, okay? Then you break even 7 years later. And this break even is nominal value of your dollars, not the real adjusted for inflation one. Okay, here the inflation we know quite high because market grow, confirm got inflation. So you tell me your break even, if you factor inflation into consideration, maybe you only break even much later. Okay, it's a very, very painful thing. Can? So this is what I want to share with you. And if you do value investing, very good. Got to be very careful also. Okay, why? Because, okay, when things get cheaper over here, the stock price come down. Let's say stock price come down, right? You think the fair value is here. Okay, you don't enter yet, you enter here. Next time you break even is somewhere here. Can or not? Possible. Then you count on the wasted time you took to break even. So this is June 02, this September 03. Okay, in between it's nearly 1 year, 10 months. 10 months can be a baby. Yeah. I'm being candid here, okay? So that you know that in this time frame, in this time period, a lot of things could have happened. A lot of things could have happened. So my advice, okay, what I feel, what I think is follow the trend. Follow the trend. Let me erase everything. Okay, you know that this is the peak. Okay, don't stop buying me lah. Stop buying. Okay, look to trim your portfolio, right? Trim means what? It means sell lor. Okay, sell. Then when the stock market starts to collapse, look for shorting opportunities. How? Use CFD. Okay, use CFD lah. Very straightforward. Now, when you see that the market here recovering already, start to look for buying opportunities. Okay, this one you use stocks, you use equities. Okay, for short term, you can consider CFD. But to buy and hold long term, please use equities. Okay, you want to do short term like that, buy, then let go, buy, then let go, buy, then let go, can. Okay, then people tell me, very hard to time the market. I say, can join our Telegram channel. We keep emphasizing on the STARS framework. We keep sharing how to analyze stocks. Slowly follow us. And we also have a course. Minghai and I, we are still planning for it because we are so overwhelmed with our current workload. So we haven't really put into action yet. But trust us, we are going to do that. Can? So if everything is clear with you, type clear in the chat. Everything is clear, not clear with you, clear for you, right? I'm supposed to explain it for you. Type clear in the chat. Okay. Robert, problem is when the chart we saw already happened, then can we say we can ride on the trend? How about once we buy the trend at halfway fill? Okay, there are ways to spot the trend, right? One of the ways is using the RSI indicator, looking at divergences, which I didn't share here because I don't want to overcomplicate things. Okay. Then you can also look at potential reversals. Like for Apple, right? I shared that there's a divergence, so please don't buy now. The price should drop. Did it drop? It did. Then 2 weeks ago, I say, not Apple, Alphabet. Okay. Alphabet shares like looking to rise. You can aim for the bounce up. Did it rise? Yes, 8+% in 2.5 weeks. Okay, not I say one. It is in the Telegram channel. You can go and take a look. Not I anyhow say one. Okay, Robert. So yeah, join us there. You'll slowly get to see what we see. And Ling is asking, did you say CFD for short-term, equities for long-term? Yes. For the buying side, okay. Because for shorting, use CFD lah, but don't hold your short for so long lah. Because you see there's always this sharp spikes. Let me change the color of my pen and highlight it for you. Here. Can you see this sharp spike up? Oh, so you short okay, for a short while only. Let go already. Now here. Continue short. Your stop loss. Or you take profit somewhere. Okay, let go. So it's never for like, wow, you hold your short for 2 years. Can lah, nobody will stop you lah. But you have to sit through the rough right now. Ling, is that okay? If this explanation is clear to you, let me know. Okay, any other questions? Wow, overrun by almost 1 hour. I'm glad that you guys are still here with me. Would this recording be available for review? This recording will be sent out to you. Yeah, give our marketing department a couple of days, maybe by Friday or by Monday next week, to send it out to you, so you can always revise. Okay, so thank you so much, YS. Any last questions? Come. Hyung Wong, power session. Okay, no last questions, but I got one small favor to ask from you. Can? Because I delivered so much, I need a feedback from you. If not, later my boss asks, walao, what you do? Why do so long one? Ask you present, you go and tell grandmother story for what? Okay, so this is the QR code. Help me scan now. Okay, help me scan now. Send me your feedback. And the bonus is in the bonus. When you fill up this form, okay, I receive your email address. I will send you the bonus. What is the bonus? Let me share with you here. I haven't done the bonus yet. So if you want the bonus, means I do more work, but I'm happy to do this work. I'll give you a recession toolkit. What is this toolkit? Okay, it is a properly done up like a mind map, right? Of the charts, the images that I look at, the sources, right? Today, there's no way I could do up slides with so many hyperlinks everywhere. So what I'm going to do is I'm going to put them nicely. Okay, hyperlinks, the chart, the image that you're supposed to look at, what to look at, how to look at it. Good. If you think this bonus is good, you think that you will give me a good feedback, type good in the comments. What comments? Chat. Okay. And I will close this feedback. The last date is 4th of November. Why? 2 weeks from now. I think more than enough lah. More than enough time to review and type me a review. Type me a feedback. Okay. And I also want to send you everything before we start to go for holiday. Right. I know you guys are probably flying off. I'm also flying off in November. Okay. Good. I also find this session very good because you guys have been so fabulous. Right? QR code for the feedback form, right? Can. Let me get it here. Here. Okay. So because you give me your best, I will never want to shortchange you. I want to give you my very, very best. Okay. So once again, guys, fill up the feedback form. That is how and that is where I can send you the bonus. Okay, Anson done. Thank you so much. Ken, with that, we have come to the end of today's webinar. If you like it, fill up the feedback form. Let me know. If you think that there are improvement points, also fill up the feedback form. Okay, join us on our Telegram channel. Let me put it up here again. Telegram channel link, QR code, sorry. Here, okay? And we'll see you soon. Okay? Take care, everybody. Have a good night. Bye-bye.